There's no becoming rich. Take all your money, buy Bitcoin.
You can wake up every morning and say GM.
GM. What about that new intro? Absolute banger. Today is Wednesday, 19th of June. This is Daily Levels with a shiny new intro, GM. And so let's look at the market. Last night I was talking about the possibility of it moving up. It did move up in the end up. And by the way, that's Al Namir, my top G student who made that intro, but I'll shout him out in the channel. So Bitcoin had a decent close to set up a consolidation. I wouldn't say obviously the bottom's in yet fully. I obviously talked about this yesterday. I talked about it in my daily lesson. I think this area will be the bottom, right? So I think that somewhere in this zone will be the bottom. Right? I don't think we go much lower than that. And the reason I say that is because, it can chop around here and then have a wick down like that. And eventually when it goes up, you look at it and say, oh yeah, this was a bottom. It doesn't mean the absolute peak of bottom's in now and you can max leverage along your net worth. No. But I think the origin of the previous breakdown, combined with the volume profile from the top to the bottom of the initial sell-off from 73 down to 57, and that breakdown level that was tried to be reclaimed, consolidated below, broke through with the CPI reading from back in mid-May, and now we're just coming back for a very simple retest of the structure break, which is a bullish setup and often leads to bullish continuation. So until something comes along and invalidates that, that's going to be where I'm operating from. And I think that we're going to go higher off this. That's my view currently. So that's Bitcoin. ETH then popped a little bit overnight as the SEC have dropped their case against Ethereum. So they're basically no longer going after Ethereum as being a security. Now, I think that while this is obviously good news, and it's good officially to have that cleared up, and Ethereum's popped on the news itself, it's not actually that big of news, because by approving the ETFs a couple of weeks ago, the SEC basically admitted that Ethereum was not a security because they approved them under the same pretense of Bitcoin, which was as a commodity. And even though they hadn't officially closed the case, it was quite obvious whenever that 180 came in that there was political pressure, probably from someone in the White House, to say to the SEC, approve this ETF and don't take such a hardline anti-crypto stance. So obviously, yes, it's good to formally withdraw their case, and it is good for Ethereum. It does clear up the confusion. But I don't think that otherwise it was as much of big news as maybe some would expect. So I do think this area is quite likely to be a bottom now for ETH with those 3 wicks down. And that seems like a pretty solid area for a higher low to form now. It can go all the way down to fill in the inefficiency impulse, but it would make sense for it not to, because so think about pricing. This was pricing in Ethereum having an ETF rejected, right? And then the ETFs got approved. So if this is how price was before the expectation of an approval, it should not go back there since we got an approval. The idea would be the market should expect Ethereum is worth more than that 31, 3200. And maybe that dip down to 34 is all we need to see. I would like to see, first of all, a move up to the highs or up into the gap here, a move back for some kind of retest, and then continuation from there. That would be my initial expectation, some kind of strong rally to clear out shorts. And basically everybody who's betting on Ethereum on a bearish perspective down here will get themselves blown out above these highs. That's where the logical stops would be, or there. So I could see a squeeze up to 3,800 pretty easily. Timing it is the other thing. You know, I'm not sure, not saying if it's going to be happening right away or happening today or anything like that. I think the markets have had a nice rally, and today is Wednesday and there's no big news, no. And it is a public holiday in the US, so there won't be any New York session, there won't be any ETFs trading today as far as I'm aware. The stock market will be closed because I know it's a US holiday, bank holiday here. Low liquidity, irregular volatility. US banks will be closed. Most forex brokers remain open. Stock market's slightly different schedule, so I'll just double check. US stock market. Stock market. No, I see. There we go. In it. Public holidays. What is it today? Juneteenth. Yeah. So, closed. So, no ETFs trading today. No New York session in the way that we know it. And over to Bitcoin. Bitcoin had a nice rally up. Last night, I was talking about this, how there was a bit of oversold action here. Down into the lows. Formed a nice support. Failed to go lower down to 64. Reclaimed. Held. Moved up. Squeezing out some shorts. Took out those stops. Tried to push to the highs. Wasn't able to quite make it above the highs. So that's the one area of concern for BTC. That is a lower high, right? That is not a completed structure shift just yet. So what you're looking for is, will Bitcoin consolidate and hold? If so, then you're looking at a break higher, and then that's actually a trend shift. Low, high, higher low, higher high. So if Bitcoin starts to move back to 65.7 and above, then it will go towards the monthly open, in my opinion. But I'll break that one down on trade of the day. The one thing I noticed this morning is a sudden increase in BTC open interest as price is pushing down to the tune of about 130 million, so a lot, like 2,000 contracts. Funding rates way down to, it would seem like there's some shorts pushing in here. Are they going to be right? Currently they're right. Price keeps drifting lower and drifting lower and drifting lower, so quite often what you see first is a spike down to liquidate some of those longs before a reversal. But I will be watching this closely to see which way this ends up resolving. You saw a pump on it here in the opposite side earlier, where it pushed up into the final high, and then obviously that wiped back off. But this is different. This is on the way down. So seems like directional shorts have been entering. As you look across the entire structure from the lows, and you look at the CVD on the bottom, so spot CVD is positive, future CVD has been negative in this bottoming range. So while price is up, spot CVD is up, future CVD is down. Funding rate has also flipped negative to positive, but back to almost negative neutral, and a spot premium all the way, and now futures open interest starting to build up. So open interest has made a higher low as price has moved up, so that's some harmony there. Spot CVD seems to be in harmony with an uptrend, but future CVD seems to be pushing against it, indicating that a lot of the selling here seems to be coming from futures. So again, the futures market can dictate price and direction for periods. It's more over time. When you zoom out, over any lengthier time frame, the futures market's not able to overwhelm the spot market, which does generally dictate the general direction of the market. So I wouldn't quite say that this is just an easy long or pile in or whatever right now, because my trade and my idea was yesterday, held 64, moved to 65.7 to 66. It hit 65.7. So to me, that move's done. Didn't quite get to 66. I thought it might clear out the highs and touch the stops. It might still do that. But that move has happened, right? So it was all I was looking for yesterday, and it has happened. So I don't think necessarily that anything's going to come from here, and this is part of the reason why I'm saying that too. If you look at from the top of Monday's pump to the bottom, so from the New York session, top of Monday's pump right down to the lows, we had this tight consolidation that we're in here, where the value area was right up just where we reached this morning. As you can see again, volume profile offers good confluence for what these support and resistances mean. Wasn't able to break out above it. It's now just still trapped in this really it's not a bullish consolidation. It's a very, very, very choppy market. And I know these type of markets, and almost certainly for me, this whole thing will reach and end up being a bottom. But it becomes a very short-term trader's market in the meantime, where all you have to understand is, even if this is bullish, people have just aped in long here, and it just keeps flushing them, and keeps making slight new lows, and slight new lows. But this all is a bottoming process. Like, if that's what price ends up looking like, it is all a bottoming process. It's just stopping out longs as they keep trying to get in, keep trying to get long, keep trying to get long, stop them, and it's just real meat grinder price action for anyone who's just trying to be a hero and catch the bottom. This is a short-term trader's market. Still, it's not a market where you can get max leverage long with your stops at the lows and expect to get Bitcoin to 100k. It's not going to happen. And otherwise, anything else of note today? Not really. ETH obviously stronger than Bitcoin because of the ETH news. A few alts starting to rally, so this is quite normal. Things like a cash. Oh yeah, I have to talk about a cash. There's absolutely zero reason why I would sell a cash here. So you have to understand, the high time frame view is something like this for a cash. And if it's bearish, I expect it to maybe fail there or maybe fail here several weeks from now, right? I think the bottom is in for Bitcoin and alts. I've talked about this, all right? The bottom is either in or we're in the next few weeks in the process of bottoming. So to sell my cycle bag, which I've had since June of 2023, after a 60% decline, I would never do that. Why would I do that? Makes zero sense. The misunderstanding people have is, I think AI might not be the best place to hold coins in the next leg of the bull, which is like 6 months away, right? For the next 6 months, let's say. But that doesn't mean it won't go up. It will go up in dollar terms. Like, if Bitcoin goes to 100k, right? A cash is going to fucking $5 at least. But if Bitcoin went to 100k and a cash went to $5, that would be massive underperformance relatively for an altcoin. An altcoin should go up way more than that in that scenario. So the only thing I'm looking at, which is not for now, it's for the next few weeks, is, do I think that AI is going to be the hot sector in the next leg of the bull if we get another leg, which I think we do get another leg, or is it going to be something else? And right now, gun to my head, I think the AI hype has probably peaked. And you can see that because crypto AI doesn't seem to be performing anywhere near with expectations along with, Nvidia and the regular stock market AI bubble. And Nvidia is now the most valuable company in the world, and that's not going to continue forever, right? I don't think there's any doubt. There's no doubt to me, Nvidia is not the most valuable company in the world. It is currently because it's got the best story. But I think there's no way, if you go a year, 2 years from now, I think there's no way Nvidia is the number one company in the world. I just don't think it happens. Because Nvidia have one very specific, narrative and story at the moment. And eventually there's going to be a reallocation into other companies that are much, much bigger, stronger, and better And Nvidia will still do fine. It's, it'll still be top 10 or whatever. But I think that reaching this peak of craziness and the crypto AI not moving, and many of them with broken structure on their charts, is not something that I see as being hugely enticing for trades. That's all it is. This can also mean, like, a cash can still go to $10, right? But if there's coins out there that go 10x and a cash goes to $10, that's an underperformance. If there's another coin out there that reasonably, not like a micro cap, like another coin that is set, 500, 800 million market cap, like a cash. If there's another coin out there like that, and it goes 10x in the next year, and a cash goes to $10, it would have been better off not holding a cash. That's the thing you have to separate, right? A cash is one of the best holds from June, 55 cents. It went all the way to 650. That's about 15x, 13, 14, 15x. Very few majors or bigger alts, very few of them outperform that. That's almost performing on par with Solana. In fact, it is basically on par with Solana. So it did really well. Some other things went up more. Many, many, many other coins went up a lot less. And do I think that the next phase of the bull is going to be the biggest for it? I'm not sure. So, first of all, people who are like wanting to know what I'm doing, I get it. But like I say, why do I tell you to join bootcamp? Why do I tell you to build your systems? Why do I tell you to form your own plans? You can't trade based on someone else's opinion. If you bought a cash because I like it and I bought it, fine. But you also have to have your own plan for trading it. Just imagine I disappeared tomorrow. What would you do? Just imagine. I'm not going to disappear tomorrow, but imagine. If I went away tomorrow and would never talk about a cash again, you would have to create a plan. You wouldn't just be like, well, I guess I'm going to hold this forever then. No, you would have to force yourself to learn where to sell it, where to buy it. And that should be the case anyway. So, I think it will do fine. I'm not even bearish on it yet. I'm bearish AI as a whole, right? Currently, that's just my feeling right now. But not in terms of, I think everything goes down to zero. I covered this yesterday, but I'll just touch on it again to make it really clear. If there's going to be two waves to this bull, there's two ways that I see it going. So you could have something like this, right? Like a phantom did. Or you could have something like Link. Now I want to cover these and show what I mean. Right, if you're trying to look for rough comparisons, there's two examples here, okay? One is Phantom from May 2021. And if you really actually just, this is how both charts looked. So to try and make it really clear, these charts both look the exact same in May 2021 in terms of massive crash, massive crash. Grind down, grind down, grind down, grind down. Link popped into a lower high, that was it. You were right to sell Link in May of 2021. Phantom absolutely ripped, massive new highs. So they're the two comparisons. And so if I put a third screen on and we look at these side by side, it's very, very hard to differentiate between any of them, right? Because if we look at near, the example I gave it the other day or yesterday, and we look at a weekly chart of near, right? We're in the process of having one of these breakdown moves. If you look at Fetch is actually the clearest example, so I'll probably just stick with Fetch, right? Fetch has had a massive run up into a massive breakdown. So did Link, so did Phantom. Phantom ended up going to new highs, Link didn't. So either or can happen. I would always lean towards the Link side of things than the Phantom side of things. The reason being is that most coins, especially as we go a cycle forward, right? In 2021, the market was not as sophisticated as it is now. When you go forward now to 2024, most people realize that these coins are just a way to make money. And if the hype has been exhausted on it, it's going to be very hard for it to make clean new highs after a crazy run up and a full collapse of it. The other thing, the other area you could look at, which some people are saying is like that we're like here, right? That we're actually more like the August 2020 post DeFi summer. So that would look like this. If you zoom in, you're looking at Link over here, and you're looking at Phantom over there, and you're looking at something like Fetch over here. You're like, oh wow, well these all look roughly similar. They all have big run-ups. They all crashed down into the lows. They all held the lows. And so if Phantom goes like, or if Fetch goes like this, then fucking boom, away we go. And we're going to have the biggest AI bubble in history. Possibly. The thing I would say, though, is different. Let's go to August, September 2020 on Link and Phantom. The problem is dilution. There's just so many coins with such high market cap that it's really, really hard for that kind of thing to happen again. So if we look at Phantom and go to the market cap chart from August 2020, so August of 2020, September, August, September, market cap 100 million, 80 million, 90 million, right? Same with Link, a few hundred million. Not already in the billions like Fetch, right? 3.1 billion already. Even where it is now, even there, Fetch is 3.1 billion, not 100 million. So to me, it's ridiculous to say that we're this early for these coins. Don't mistake me. If you find coins that are lower cap, that have more growth potential, that have charts like this, they can absolutely do that. But my feeling would be stuff like Fetch is probably going to follow more like the chain link of May 2021, where it crashed down. And then in the rest of the bull, it was just able to make a lower high, right? And that's just really what it did. It doesn't go to zero. It comes up, comes down, and that's eventually it. And of course, Fetch is obviously combining with the other two. The point I'm trying to make is ASI, Fetch, Ocean, AJX, it doesn't matter. If they launch from today, because they all look the exact same, if they launch from today, that's where you take the chart as having started from. I know it's going to be a new chart, but that's just a way to trick you. Right? Don't be fooled. This is the chart. When the new chart starts, remember that it's 70% off the highs with a broken structure. But then let's just go back to Akash. We'll look at Akash because that's what we'll talk about at the end of this. And so it's the same thing. Take away that. So you look at these moves on Chainlink, Phantom, and AKT. Now Akash isn't as big, right? I think there's actually definitely room for it to grow, more so than Fetch, 750 million, and I think it can make new highs, but it's still gonna require the whole AI narrative to kick off. So I do expect this to be the bottom. I expect it to hold. I expect it to chop around there for a while, and then eventually go up. The only question I have then is does it go to big new highs, or is that it just stuck in there for the rest of the cycle, or does it maybe moon? Right, there are your two paths. In either example, I think we get to $5 or above or whatever, and I'll make my decision then. I think you just have to compare and contrast and see which sector do you think is best. Just like Chainlink was not the best thing to bet on in July of 2021, right? July 21, Chainlink just popped into a lower high. This is like the worst case scenario thing of what I see for something like AKT. Right, comes up, dips back, unable to make a new high, chops around like that, and that's it. Just a protracted multi-month lower high. July, August, September, October, November. And the thing is with Chainlink, if you were a Chainlink bag holder and you were too zoomed in, you would have thought this is all fine. Look at this, is green. It's going from $14 to $34. So you're making money in dollar terms. It's just that other coins are going way, way higher, and it's the wrong asset to choose. So Akash will go up in dollar terms, no doubt. I've no doubt it will go back up from $3 to $6 or $5 or whatever. It's a question of performance relatively. And so I'm still trying to decide that. What do I think in terms of the relative performance of AI versus other coins? So that's it. GM. See you all on the live stream later, 4 p.m. UTC.